Hey, how you doing? It's Clayton Teedy from the First Home Buyer Club. 100 lessons in 100 days, day 90, lesson 90. Today, what I wanted to talk about is mortgage reduction strategies and tips to how to pay off the home a lot faster. So we've had a couple of messages overnight in regards to the follow-up from Sunny and Jenny's mortgage reduction session I held yesterday. And they were curious to know how we've created a plan with the clients to have them be mortgage free in as little as 8 years. So I've got written down all the different tips and tricks and strategies that we discuss with our clients. And right now you can read through them, write them down, and then start implementing them yourself in your own mortgage. So the first point we're going to talk about is payment history itself. So most people let me correct myself. A lot of people pay their mortgage monthly because that's how it's set up during the bank. Be aware that the bank's going to set up in their most favorable way, and that's keeping it once a month because it's less payments over the year that they actually receive off you, which means it takes longer to pay it off. So the first thing you want to do is switch it from monthly back to fortnightly or weekly. And here's the reason why. You do it fortnightly or weekly, you're going to have 52 or weeks in the year worth of payments, or 26 fortnights worth a year. Now, on a standard month, we all think a month is 4 weeks, even though the calendar month is 4.333. So it means over the year that you'll get one full payment more by doing it weekly or fortnightly to help you pay off the home faster. Point number two, I didn't even really talk about this, but I'm going to talk about it. Point number two is you actually put more money into your offset account because the bank calculates the money that it's got to take out every day, or how much it's going to charge you every day. It just takes it out once a month. So the more money sitting in the offset account each day means the less interest you pay, which means those same repayments each week, fortnight, or month are helping you pay off that home faster. Point number two, extra payments. So here's the thing is $100 a week on a $400,000 mortgage could knock off 8 to 9 years off your mortgage, just $100 a week. Not a big difference in the grand scheme of things to your lifestyle, make a huge difference to your mortgage itself. Point number three, stop paying bills in advance. That includes your tax. So I've got some clients that they withhold tax and get a lump sum at the end of the year. And then others that what they'll do is they'll pay all your loans in advance. So, I shouldn't say loans, they'll pay things in advance like your electricity bill. So instead of paying $400 a quarter, they'll figure that out, which is roughly $1,600 for a year. $32, $33 a week, and they'll pay it each week so they don't get the lump sum. Here's the thing, for that entire 3 months, you've got all that money that could be sitting in the offset account and not charging you in or saving you on interest that you could be utilizing until the point comes that you've got to pay the mortgage, until the point comes you got to pay that bill. So get it into the offset account, save money there. Point number four, which I spoke about, offset accounts, extra payments, and all your income inside of the actual offset account. So instead of getting it sent to an account and then transferring savings or extra money into the offset account, change your bank accounts or change your pay so it goes straight in the offset account, and from there you pay bills and spend money, because every day money sits in there, you get charged less interest. Point number five, review the bank's rates regularly. So don't be loyal to the bank, because they won't be loyal to you really at the end of the day. Every 12 months, you should be reviewing your loans, making sure you got the best rates and you got the best deals for you guys, and making sure for the family that you save the money. Point number seven, sell unwanted items around the house. I remember when I moved from Townsville to Brisbane, I had like 3 or 4 boxes worth of stuff sitting under the staircase, and I probably stayed there for a good 5 years before I started to shift through it. If you've got all these items that sit around the house and collect dust, it doesn't matter if you pay them out or you own them outright. Look to sell them and put them towards a mortgage. That boat, if you've got one of those boats, and I've got clients that have got this, we've got boats, haven't been out on the boat for 12 plus months, yet then they've made the decision that what they want to do is they want to keep it there because they own it, and then when they use it, how about sell it, put the money into the offset, help you pay off that home faster, and then when it comes time that you really want to use it, buy a new one. You've saved a lot of money on interest. Point number 8, extra hours at work. And everyone laughs about that like, oh, you want me to work extra? But think about this. For some people, and we have some clients that are doing this, are getting anywhere from 500 plus just for working a Saturday. Now, everyone knows how I am with the numbers and how analytical I am, especially in the first 12 months. You're going to pay back twice the amount of interest with most bank loans. Even with the lower ones, you're still paying, 70% plus. So if your interest is $100, you're probably paying $150 to $200 in interest for that 100 in principle over that first 12 months. That extra 500 could save you anywhere from $500 to $1,000 in interest repayments just by paying it off faster at the start. Point number 9, work harder at the start of the mortgage, and it goes in with what I'm talking about, right? At the start of the mortgage, you owe the most amount of money, you pay the most amount of interest. What it is like a seesaw. As you start to pay down that mortgage, less becomes interest, more becomes principal. It's still the same repayment each week, fortnight, or month, but it's just the breakup. What goes of interest and what goes of principal changes. The quicker you pay it down at the start, the less interest you pay, which means you automatically start to pay it off faster because there's less interest. Point number 10, consider looking at interest-free credit cards and utilizing them for the 55-day period. Here's what I'm talking about. Most people get paid weekly. 7 weeks is 49 days, so it's nearly a full 8 weeks, or 8 sevens are 56, a nearly full 8 weeks where you can have your income sitting in the offset account before any money comes out. Now, the beauty about credit cards, if you're disciplined, is that you can automatically set it up so you don't even have to worry about at the end of the 55th day what comes in and what comes out. You're just got more money sitting in this account, getting charged less interest and helping you pay off that home faster. Point number 11, consolidate the bad debts into the loan as soon as possible. What I mean by that is, firstly, let me go back a step. The ultimate aim when you get into your own home is start paying off the higher interest rate loans first, because they're the ones that are costing you more money. Doesn't matter if you have a $400,000 home at 4% or you have a $20,000 loan at 20%. The 20% loan is still costing you a lot more money than the 4% one, even though it's a smaller figure. Let's focus on paying that debt down faster so that you free up more cash to put in the house. Alternately, as you start to create equity in the house and you start to pay it down, you'll have money that you can utilize for other things. You can look at consolidating your debts into your home loan to make it one payment and help it pay it down faster. Point number 12, split your loans. So once you understand your budget, you need to work through things and go, okay, well, in the next 3 to 5 years on our $400,000 home, we know that $50,000 is normally going to get paid off. We can do an extra 50 or 100 on top. So let's look at if for a 3 or 5 year period, fixing say $250,000 of that and leaving $150,000 as variable, because the fixed rate, you got it cheaper and it's lower and it's a big portion you're not going to touch anyway. And then the rest of it, let's just smash it down, or smash all the money into the offset account if you're planning on buying other property, and help you pay off that home faster, because it'll make a world of difference. Point number 13, invest with your equity. So if it's buying property or it's buying shares, or your financial plan has recommended something, as you start to build up that equity, don't just let it sit there. Invest it in something else that then can multiply, which then you can utilize it to pay back off the mortgage or whatever. Now, the good thing if you do buy property, and especially if you buy new as an investment, what happens is you'll get a lot more tax deductions because of depreciation. And then what you're going to do is you're going to find someone that's going to rent out their house weekly and have that money going into the offset account each week, and then plus the tax deductions and the extra money you get off the government for it being new. And then once a month, you're just going to pay the interest repayments. It's always to help you pay off your own home faster, because that's a non-tax deductible debt. That's the one we want to get rid of quick, smart. Now, point number 14, review your budget regularly. I've lost count of how many clients I talk to that don't know where their money's going. If you don't respect money, the money won't respect you. If you want to have more money, understand where it is and where it's going. Point number 15, stop going out for meals all the time just because you can't be bothered cooking. Now, here's the thing. It doesn't mean that you can't go out and have those lunches or have those dinners or have those breakfasts. But some people just go out every week multiple times just because they can't be bothered. You know, that extra $100, $200, $300 that you're spending on food because you can't be bothered getting in the kitchen for 20 minutes could make a difference of 15 years on the mortgage. Let's understand what's important for you and let's work towards it. Point number 16, plan for bills and spending items throughout the year. Birthday presents, Christmas presents, you got kids, obviously Easter, all those costs during the year, let's plan for them. The car register, the car insurance, the car servicing, write them in your budget, write down the numbers and plan for it. Because here's the problem. If you don't plan for it and then you wonder why you got no money, you're going to give up in your budget and then you're going to give up on focusing on your money. Once you understand and can master your own money, the world is your oyster. Point number 17, always be asking for discounts. And that's yearly, right? Especially with your banks, you should be, if you're not reaching out to your bank, reach out to your mortgage broker each year. Ask them what deals are around, what you're entitled to, and if there's anything better for you and your circumstances. Especially once you get 20% equity, you don't have to worry about mortgage insurance. And then it's a small fee potentially to switch banks. But if you're looking around and you see it online and on the news and all the rest, there's banks giving cash backs of up to $4,000, I think I saw the other day, just to switch across. Now, here's the thing. Imagine you got $4,000, it didn't cost you to switch, and you're saving 1% on your home loan. That could make a massive difference to you. Don't be loyal to the banks so the banks won't be loyal to you. Point number 18, always make payments on time. If it's a credit card, if it's a home loan, if it's a personal loan, I don't care if it's a public holiday and you're like, it shouldn't matter, it's only a couple of days. Because what happens, especially with comprehensive credit reporting now, when you start to miss those payments and there's those dishonor figures for $5.48 or whatever it is because you're a day late, the bank starts to see it and it's on their record. And then when it comes time to asking for a discount or wanting to change banks or wanting to save more money, that's going to stop you because the bank is going to think, well, are they actually that good with their money and should we trust them? Make sure you pay them on time, or if not, and something I always do, I always set my bills to be paid a day before. Because then if the worst case ever happened and something happened with my bank account and money didn't get transferred or there was an error, I still got the second day that's going to collect, is going to sort it out and pay it, and it'll still be on time and I won't have to get a fee. Point number 19, and this is mostly for like polices, nurses, anyone that can salary sacrifice their mortgage. If you have the opportunity to salary sacrifice your mortgage, put everything into it. Put as much as you can and help yourself pay off that mortgage faster, because it works twice, right? Not only are you getting the pre-tax money going to your mortgage, but then it's reducing the amount of tax you're paying, which is then saving you more money, which you'll get more money back each week, fortnight, or however you get paid. So if you can salary sacrifice your mortgage, do the maximum amount. Also on salary sacrificing, just because you can salary sacrifice doesn't mean you should go buy one of those brand new cars just because someone said it's good for your tax. You still have an expense. And with salary sacrificing cars, it accounts for tires, servicing, rego, fuel, everything. So everyone goes, well, that's great, until it's time to purchase something and it's written there how that's a massive deduction, and the bank's going to consider that and actually is not going to allow you to borrow so much. They've got to make money to manage that too. Just be aware of that, right? And don't go to buy stuff just for the sake of saving a little bit of tax. Make sure your money goes to the right place. Point number 20. Refinance if cheaper. We spoke about it before, every 12 months look around, but don't be afraid to pull the trigger. Now, if you don't feel you're comfortable enough to walk into the bank, go speak to a mortgage broker and go see what they can do. They'll do a lot of that stuff, so where you can be at home, you won't even have to leave the house, you can do the paperwork, you can meet them at your house, and it's going to make the process a whole lot quicker. Point number 21, create financial goals. Like anything in life, if you don't have a financial goal that you're trying to aim for, you'll never get there. It's like a GPS, right? You get in a car, set your GPS, you want to travel to a certain point, you're going to get there. You're going to get the fastest direct route. If you just jump in your car, aimlessly driving, hoping that you're going to get somewhere, especially when you're in a new city and don't know exactly where to go, so chances are you're not going to get there on time. And yeah, you might get there eventually, but what have you lost by just stumbling and fumbling through life? Point number 22, stop buying new shit. Now, it's funny. I always speak to everyone that we've got to buy new this, got to buy new that, got to buy new this. You don't need a new lounge when the last one is only 12 months old. The fridge was bought 2 years ago. Why are you upgrading it? 1,000, 2,000, 4,000 here. If you're not smart with your money, you're going to find that it's going to run out. And the other thing is the extra payments you put into your mortgage, and this is what I always talk to everyone about. You want to put extra payments into your mortgage. You can have guilt-free shopping on the bank side because it's all the money you saved on interest repayments that then you can utilize. Point number 23, make it a game and then reward yourself. So you might, with your partner, go, okay, in the next 12 months, we're going to pay off an extra 20 grand. So that first 12 months, you put an extra $400 a week and paying it down faster. At the end of the 12 months, you're like, congratulations, we won it. Firstly, when it's a game, no one likes to lose, right? You got more chance of winning. Secondly, when you know you're going to get rewarded, subconsciously, we get rewarded. Like, we think about it with a dog. They do something good, you pat them on the back, you give them a treat. Then you ask them to sit down or shake your hand or roll over. They do it again because they want to get rewarded. Same as us, right? No one likes to work hard without getting an incentive or some sort of reward at the end. So set a goal, smash the goal, reward yourself. It's not all about living in the house, locking yourself in the house and living off bread and water. Make sure you actually reward yourself. Point number 24, when it comes to families, make sure everyone's on the same page. And here's what I mean. When you're looking at purchasing your own home and you're going, yep, I want to pay off my home in 10 years. And your wife's like, no, I want to go on a holiday each year. And then 12 months in, you're like saving a lot of money and she's just living life. And then you get frustrated and argue at each other. Make sure you're both on the same page. You both want the same thing. It's just a matter of, we're all adults, right? Having a talk. This is what I want. This is why I want it, and let's do it. And then we compromise. Your wife might not want a 10-year mortgage because she's got other plans, which you didn't know about. And when you come together, you might figure that with what you both want to do in life and what you're trying to succeed at and the things you are planning for the future, you might be able to do it in 10, 12, who knows, but be on the same page, you'll get there easier. Point number 25, and this is for all you people out there that are horrible with credit cards, rip them up. I'm sick of hearing stories from families that earn really good money, saving a lot, and then they get caught with the plastic trap and they go out and they start buying things. If you know you're one of those people, rip up the credit card or take it or get it taken away from yourself. It's the ultimate trap if you're just always buying things on credit card for no reason at all. Now, I use my credit card for most things, right? So credit cards aren't bad. Use all my food and all my regular payments on my credit card. And then I also have it auto set up, as I spoke about, I think it was 0.5, so that every 55 days the money comes out and I don't pay a cent of interest. Now, why do I do that? Because I link it up to my Qantas frequent flyer points. And as a result, I can then upgrade my flights to get better seats as they come. But if you can't be trusted and you're knowing yourself, if you can't trust yourself to use a credit card, then it's probably best to cut it up and actually don't use it. All right, guys, I hope you got a bit out of today's 25 strategies and tips to pay off your home faster. The one thing I will stress, all these 25 points are great, but you really need to understand your own money and have a budget. Even if it takes you a couple of hours, take that time with your family, print out your bank statements and start writing down where you spend your money. Because once we understand where your money's going and what sort of lifestyle habits you have, we can then change those habits and get you moving towards the right direction. All right, guys, have a good day, and I'll talk to you soon. Bye.